Welcome guys, welcome to another Cardano ADA video. As always, let's start here on the monthly chart. So this September month could not close above this resistance. We are already fighting for months here now. The 23.6 Fibonacci retracement at 91 cents. It was actually the third month in a row where we couldn't accomplish to close higher time frame candles above this resistance. And but that's not a problem, right? Because we still have this bullish structure. It is supported by momentum. If you look here at the histogram bars, we are printing higher highs, and the October bar is expected to be much higher because this should be a much more bullish month. So it is the wall of worry, right? We're climbing the wall of worry, but slowly and steady we are making our way up, right? It's just, in my opinion, it is just a question of time, right? And once we closed higher time frame candles here above 91 cents, we are going to attack this current cycle high here at $1.10. And once we took this level here, the next resistance will be the 38.2 resistance level at $1.33. Let's proceed with the weekly chart, and I will lead you through my most relevant elliott wave counts. And let's start here with with my primary count right now. It is the nested impulse, and we're currently we are taking it step by step, right? So currently we're looking at this circled wave 3. We should be in a very early phase of it. We are building this 1-2-1-2, another nested structure. You could also you could see it as one impulse, right? 1, 2, and that's fine. You can count it that way. I think we will stick to it because that just fits a little bit better. But on the way it will reveal itself. We will see what the nature of this move is going to be. So this wave 3 target here, the minimum target, is the 1618 at $2.17, and because it is a nested structure and this is the wave 3 of a higher degree of wave 3, it just means there are higher prices potentially possible, right? So we're talking about the 200% level, which is also in play at $2.50. And if things get really crazy, we could actually even see the 2618, which is a new all-time high. I'm not saying that this is what's going to happen, right? That are just the possibilities within such structure. I would say, stay humble for now. Let's eye $2.17. If we can reach $2, that would be a great achievement, right? So let's see how that plays out. Now this count is a little bit different. It is a different impulse. It is a let's call it a normal impulse, right? No nested structures and all that, just a normal regular impulse. And in that case you have again your 1, 2, then you have another 1, 2, or maybe even a 1, 2, 1, 2, but it leads into this wave 3, right? So this is not another wave 1, it is a wave 3. And judging by how it looks, I mean, it is completely parabolic. It is one straight line to the upside. It would kind of fit. This is how a wave 3 actually should look like, right? It even hits the targets that we are expecting, the 1618, even the 200%. So you could argue this is actually a wave 3. The problem with that is the volume. If this is really the main wave, the heart of a trend, right? If this is the main part of the trend with the most FOMO and all that, you would expect some volume, right? Like we had here. So this was your wave 1. You go into a wave 2 correction, the volume decreases, and then you have an explosion of volume. Not just barely double the size of the previous volume spike. You really wanted to triple it, and you want to hold this volume over a certain time. We couldn't see that here. So volume wise, this is likely not the wave 3, but it could it could come later. The volume could come later into the market. We could, play some catch up here, right? We are currently in this, or potentially in this wave 5, and all the volume could now come into this wave 5, and this wave 5 could extend, and it actually should extend to, to kind of keep all of this in proportion somehow. So if this wave 5 is real, then it should be extended. And the minimum target for an extension is the 100% extension level at $1.56. So you can actually expect, if it extends, it should even go a little bit higher, right? So even in this count, which I think is not so likely because the volume doesn't add up and the proportions doesn't add up, but if this count is real, we are going to see also a very nice move to the upside, and probably terminating somewhere between $1.50 and $2. So to round things off, we want to also have a look at the bearish scenario, not because it is highly likely, but because we want to keep it in the back of our minds for purposes of risk management. Okay, so let's dive in. We never left the bear market. The 2021 top was the start of the bear market. We have a first wave down in imports into A, and now we are in this wave B, and this would then look like a complex structure, like an A, B, C into W, whatever, an X, and another A, B, C into Y, and this C is currently ongoing. We're in an early phase, and this C should at least hit $1.30, right, the 786 target. It would be a very underwhelming C, but yeah, it sometimes happens. The C wave sometimes is underwhelming. Most of the time, it is actually the opposite. It is a little bit longer. So we would expect at least $1.50 and maybe even $1.80 here at the 123.6 retracement level. Extension level. So if it really extends, maybe we can wick into the $2 area right here into this golden ratio, but I don't think it would be sustainable. I don't think, if we're actually dealing with an ABC, I don't really see how we get past $2 here. Right? We would then actually finish the cycle between $1.50 and $1.80 most likely. So we have to keep this in the back of our minds. I'm not saying this is very likely, but that's why we take the profits on the way up. That's why $1.30 is a good first target to take profits, right? Because there is a chance that this is just corrective and pretty underwhelming in the end of the day. So why not take some profits here, right? If you averaged in here or here or here, it just makes sense to take some chips off the table here. So last but not least, let's have a look at the lower time frames. We are here on the 4-hour chart, and let me begin with a little recap of the previous video, or the main idea, right? We're dealing here with this nested structure. You have your 1, 2, and then another 1, 2, which is nested into this first impulse here. And the idea was that this wave 2 of the nested structure is already in. We got this WXY complex correction, then followed by a beautiful impulse into a potential wave 1, then this correction into wave 2, another bounce, and we thought, or the idea was, this could be our wave 3 that breaks $1 and goes even higher. And this idea got invalidated once we took this low, and we were open for this idea, right, that we find this wave 2 here a little bit lower, and it is okay as long as we stay above 68 cents. So is it all over if we lose this level here, if we go below 68 cents? Well, the probabilities are getting bigger to retest 50 cents, but there is still a bullish scenario even if we go below 68 cents, and I will show you that in a minute. But before we do that, let's dive into the new main scenario, which is still is nested structure, this 1, 2, 1, 2, with the difference that this wave 2 here is found a little bit later, right? The correction goes a little bit deeper, and is this the low? Is this now a trend continuation? Are we in an early wave 3? So we don't know. We don't have a confirmation yet. I would say a first very good sign would be breaking this channel to the upside and retest it, break this dollar mark here, retest it, and then shoot off to at least $1.30. This is what I would like to see. This is this is the ideal way, but yeah, it has yet to be confirmed. So, but there is a potential. There is a good potential for that, because if we look at the structure here, it does look rather finished, right? You have a complex correction here. Yes, we had this impulse that hyped us, that created this fake out. Lots of longs jumped in here, and yeah, they all got liquidated because the correction just wasn't over yet. Right, the market got too bullish, and market makers are taking advantage of that. So if you have an impulse within a correction, if you have an impulse, right, and does this fake out, you're likely dealing with a flat, right? B creates a new low, and then you go into C, and it takes this A high here. So you're likely dealing with an A, B, C. Okay, let's dissect the structure. So you have a first structure here to the downside, which should be an A, B, C into W. You then have your flat or ABC into A, depends on where you set the W, right? It doesn't matter in the end. You have to move up into A, B, whatever correction in B, and then you have your impulse into C, which creates a new high, at least per candle close. So then this is your top of X, which hits the 786, which is the most common target for an X wave. And it is followed by another simple correction. So far it looks like we have an ABC here, where the C is a little bit elongated because of the liquidation event. It makes sense. So more important than the structure are the levels, right? 786, very common level. 100% extension level, also very common for a W. Sorry, for a Y. So yeah, we have to be open-minded for the possibility to get rejected here and come down for a final test. Even that I could actually chart. In that case, you would deal. Let me quickly remove the brushes. In that case, you would deal with an 1, 2, 1, 2, 3, 4, 5 into 3, 4, 5, which makes it an impulse. This is an A. You then have your A, B, C into B. Yes, 786 is quite high retracement for wave B, but it happens. And then you have your 1, 2, 3, 4, 5 ending diagonal. Ending diagonal because this wave 4, this potential wave 4 here, is invading the price territory of wave 1. So this is also how it could play out, but keep in mind, once we close candles here at the 886, which is in line with the 123.6 extension level, which is also common for an ABC or a WXY, it would make it more likely to take this low here. So we don't really want to see that. But again, even if we go below 68 cents, there's still a bullish scenario, which I will show you now. So you can call this the worst bullish count we have. It gets activated once we lost this 68 cents, at least for me. You can also work with it right now. In that case, you're not working with a nested structure 1, 2, 1, 2. You're just working here with this 1, 2, 3, 4, 5 into 1, and now you have a bigger wave 2. The reason why I don't think this is likely is because I really struggling to count this as a wave 4 because it went so deep. The 0618 is just not a common wave 4 target. It's very, very rare. Okay, in crypto it does sometimes happen, but you have to set rules for yourself, and I said to myself, I'm not going to accept a wave 4 that is below the 50% level, retracement level, if there are other clues that you're dealing with a different structure. And I think if you're working with this 1-2 structure, so you're currently in this 1, 2, and this is a wave 3. You would expect a nested structure for a wave 3, because the wave 3 most of the time is the extended part of an impulse, and that's why you have this nested setup. So for me, it makes more sense to see it as a 1-2-1-2. But you could also say, this is a 1-2, and we will later on see another 1-2. right? So this is also another possibility we have to keep in mind, but yeah, we will track that in the upcoming weeks and months. So yeah, I don't think it is a likely count, but you can count it that way. And the important retracement levels here would be the next retracement levels if we see another move down, which is possible. We have to really be open for that. There is the possibility that this is an ending diagonal and you're seeing a 1, 2, 3, 4, 5 and a brutal fifth wave to actually capitulate the market, right? We would then go likely into this golden pocket here at the lower 70 cents mark, and then see our bounce into this wave 3. I am totally open for that, guys. I'm not hyping anyone up here. Yes, we can see that, but we can easily see that as well, okay? So please keep that in mind. And yeah, the last resort would be the 786 here at 64 cents. Really, we don't want to go below that. If we go below, we will hit the 886, and you know what happens if we hit the 886. We will like to take this low. Not only test it, we are going to take this low. So yeah, that's pretty much all I can say to this count. We have it on our radar, but yeah, it's not the preferred count. So thank you for your time, guys. If you liked the content, please leave me a like. Comment in the comment section if you have any suggestions, you want to analyze me certain coins, or yeah, if you just want to critique my analysis, I'm open for everything. And subscribe to the channel if you haven't already. I will add new coins and I will upload more frequently. I still have to sort out a few things, and I'm preparing the charts and all that. So yeah, I will add Bitcoin and very likely also Ethereum. So yeah, subscribe and stay tuned. See you in the next one.